それではここでヤットさん、伊藤浄一による対談。
Now, let's begin the dialogue between Mr. Yat and also Mr. Ito. Okay, thank you.
It was funny, we were talking behind in backstage, and Yat mentioned that you were on stage at NCC in, what, 2007?
2007, 15 years ago.
So
Yeah.
15年ぶりの NCC でやった。
So this is like 15 years, first time in 15 years.
Almost two.
Yes,
Oh, yeah, Web
almost
1.2, right?
Yes.
So I actually wanted to just start kind of where you ended on your talk, because I think it's a point that probably people haven't discussed so much in Japan, which is what does it unlock and how does it unlock it? And I think you have probably more experience setting up DAOs and token economies than I think anyone that I know, and possibly anyone, period. But one of the things I think that's interesting, that as we look at like how does governance work, how is it different from a corporation, and what are best practices? Because I think a lot of people think about tokens and think about ICOs in 2017, where it was really just scams, right? But now these are a new form of organization. And can you describe a little bit kind of like how they work?
So, I mean, first just to, one of the reasons we're so excited about DAOs is because we think it's basically a way in which we can iterate on democracy. Because normally if you iterate on democracy, it can be very, very expensive or very, very dangerous, right? But one of the frameworks here is that with metaverse building and DAO construction is that we can experiment on democratic principles, but at the rate of technology. Which does mean that we should expect a lot of DAOs to fail, as you do in constructing these things. But what's really interesting is a DAO can't function with centralized control. Right? It has to be decentralized. And in fact, the more decentralized the network is, the more, and this is kind of, I guess, the dichotomy here. On one hand, you would say, well, if it's more decentralized, isn't it more chaotic? But if it's more decentralized, it's also more resistant. Right? So if you want to make a change in the network, you have to seek the consensus of everyone, or at least the majority. And if the majority does not agree, then it won't happen. But it also means that in order to give this understanding, you need to raise the level of education and understanding. Otherwise, there's no point. So we're reaching that point, right? That is like the next level. You could argue maybe 1,000 years ago, we needed kings. We needed central control because the majority of the population was not educated. They didn't understand these concepts, and it was dangerous. But now, because of education, these levels, as we improve, we have this today. The thing that DAOs unlock is the fact that it now, and this I think is important for people to think about Web3 and blockchain, is it is a capitalist framework of society. So if you're pro-capitalist, if you're pro-democracy and property rights, great. If you're a communist, if you're ultra-socialist, that might be a little bit difficult because there have been blockchain attempts that think about it in a very socialist framework. And it has not worked because inherently people operate still in an element of self-interest. And then how do you create a consensus around self-interest that benefits the masses as a whole, like a distributed justice? And that's the point where I think DAOs unlock. And it also then, as I mentioned with play to earn, unlocks an economic potential as well, because now you can value it. In some ways, even though it's invisible, you can look at America as a democracy functions in a certain manner, and it unlocks a certain kind of capital class as well as the economy of the US. If the US was not democratic, was not ruled in its current format, it would not have its economic system, and it would not be valued perhaps as the biggest economy in the world.
And you were talking a little bit about debt versus equity and stuff like that. And like one of the things that I imagine is that a small store right now is mostly debt financed, right? Because one, you can't check the books and you can't actually audit the thing, and it costs too much to do an audit to actually be able to turn it into an equity investment. But it seems like and I think when we think about DAOs, we think about scams and we think about risk. But theoretically, with everything so transparent, that it should be able to be protected and governed. And could we unlock equity for a lot of entities that we currently don't? Right?
So all of this comes down to this idea of how do you appropriately allocate risk, right? And if I want to allocate risk in a certain area, I can choose to do it not only entirely for profit. Some people do that. But you can also think of this concept of maybe double or triple bottom lines. We see today where people, for instance, are investing in companies for profit, but also because they want to make the world greener, right? Or because they want to offer a more sustainable business. So you make investments based on this. And now we can do that because you can transparently see it. And you can see it in real time. I can immediately see what the value of an NFT could yield. And I don't have to go through an auditor, go through a central process and analyze. I can myself decide, oh, this makes about $1,000 or $500, and I can forward value it, and I can purchase it if I want. Now, what it does for the person I bought it from is a different kind of economic freedom. Because right now in the world, we have most of the world that doesn't have a lot, and a small percentage of the world that has a lot. And they, what's the mechanism in which they can actually, for capitalist purpose, distribute capital to the rest of the world? We think this is a much better way because you can unlock areas of capital that are otherwise invisible, to your point.
And I was remembering back in like 2007 with Web 1 and Web 2, where people would release like monthly average users or page views, and everyone lied.
Yes.
Right? And everyone every month would they don't do it anymore in Web 3 because it's all there. You can't, right?
That's right.
And so one of the things I think that's really interesting, and I want your sense as investor, so all the data is there, but it's still kind of hard to analyze. I think most people have difficulty valuing tokens, understanding the dynamics. But as a professional investor, you're able to take, I think you invested more than anybody last quarter in Web3.
Yeah, last 2 quarters.
Last 2 quarters. So it's the world's largest Web3 investor. You're doing an analysis. And like, what are those tools, and will they be available to people? Because the data's there, right?
Yeah, so first, everything Web3 is open and transparent. We don't invest in anything that isn't Web3 because we can't analyze and look at it. But also, we don't think it constructs in the open network effects. Market gyrations aside, if you invest in something that's in the open ecosystem, it benefits the whole network as a whole. So the analogy I put is like a country. If a country, you could have, Digital Garage could be like a really, really big company, right? But the fact that it then creates employment and opportunity means that everything else around it benefits too. The restaurants have more business, right? The transport has more business. Services have more business. So it all rises. So when you're constructing and thinking this way, it's the shared network effect we talk about. So that makes sense. So as long as we invest in companies that share a network effect across each other, that actually benefits the whole ecosystem. Axie Infinity was the biggest blockchain game last year. But when its value increased as much as it was, it's still worth billions of dollars, but it was many more billions back then. The billions of dollars of value it generated didn't entirely sit with Axie. People were able to distribute the value and the capital into other games, which gave rise to the entire increase of what is known as GameFi. And that's the point about Web3 and the shared network effect. Now, for people who don't understand it, it's like tools. One could argue that we may not even fully understand financial instruments today. How many financial crises have we gone through in just the last 2 decades that supposedly the smartest financial people in the world should have been able to guess, right? And this, again, leads to another thinking about the risk of centralization. We have given trust to a small group of people in the world who are, the smartest people in finance to analyze, our financial risk. So we trust them. Call it a bank, call it an investment firm, call it a hedge fund. And often they get it right, but sometimes when they get it wrong, as we have seen, they get it catastrophically wrong. Now with Web3, it's not only those investment professionals, it's mixed with everyone else who you could argue is an amateur, who is not supposed to be qualified to know how to run a financial system. But with Ethereum, you now have a blockchain, a database system that is a financial services service that is as good as what Goldman Sachs or JP Morgan would build, except now you can access it without paying $1 billion to construct it. So the net effect is that now you open up the ideation and innovation of the masses. And we've seen what has done when it's unlocked. In the social sense, it's like Instagram, right? But even with things like Etsy or YouTube, right? You've created a completely new opening up of creativity and ideas that nobody would have otherwise thought because it was centralized. And the world of economics, which is what we all run on, and finance opens up as well. So I think we'll get to better economic frameworks because more people can see it because it's open.
And I think I've been spending a lot of time talking to traditional Japanese investors and companies, and and they're used to having like Standard and Poor's or like analyst reports and things like that, and I think they don't feel safe right now investing. And two questions. So do you think it's normal people should be investing in tokens right now is one question, and how, do you think that the traditional trading companies and the rating agencies will learn how to do it, or do you think a completely different way of understanding risk is going to happen? Because I think just from a brass tacks perspective, everybody's like, well, what do I do now? You know?
So I view it as you need to know enough, right? Obviously, right? If you don't know what you're doing, you should be.
And this isn't financial advice, by the way.
I know,
right?
not financial advice, just to be clear, right? However, it comes down to, so when you talk about blockchain and authenticity, it's also accountability, right? What blockchain does is it opens up and proves who you are, what you've done. So that's accountability. So you need to be accountable for your action. If you make an investment, you ought to be accountable for that decision. The thing why Standards and Poor's and these organizations exist is it becomes a way in which you don't have to be accountable for that decision. From an investment professional standpoint, we want, for instance, and I think all good investment teams want to have people who make decisions that are accountable for them, who are responsible, will say, I made this decision, I have conviction, we should do this, and if things go wrong, then it's my fault. But if you use, and no dig at people who work at McKinsey, it's a great firm. But, reason why consulting firms exist as a business model is because it's delegating authority and responsibility. So when you delegate that responsibility, actually you create more risk. Why does someone who doesn't understand the business now get to tell you why you should or shouldn't invest? Yes, maybe it protects your job. Maybe it protects your individual safety. But as a group, as a unit, you just created much more risk. So I actually think that with blockchain and with openness and also on, we have a responsibility as investment, if we think about investment, to analyze the stuff ourselves because we need to be accountable. And if we are accountable, then we can make good decisions or bad decisions, but at least we can know the consequences of it, which we can't do today. It's someone else's fault. It happens a lot, right?
Mm-hmm. That's good. And I want to talk a little bit about also the market, right? So,
yes.
So because I was on a call this morning with a bunch of Japanese politicians who had been helping a lot with getting Web3 on the agenda in Japan. They're like, oh no, now this is really bad. And I said, no, actually for startups, I think it's kind of good because now we have value investors, we've got engineers not just doing NFT flips, but actually trying to build companies. And I think for startups, it's a good thing. But I don't know how you're thinking about. So
I mean, obviously, market gyrations are always sensitive. But this is the best time for builders. The reason why I shared that slide earlier, when we started building in the space in 2017, 2018, we were not part of the Bitcoin bull run, right? When everyone was just focusing on the price. We started building when Bitcoin was actually $3,000. By the way, no fun. I'm not saying it's going to go there. But the point on this is that 4 years ago, when it was a real crypto winter, it's pretty chilly, but it's not really a dead winter.
Yet.
Yeah. Is because people were really running for the hills. Because the only utility for Bitcoin and Ethereum was generally speculation.
Mm-hmm. Yep.
NFTs did not exist, really, when we started building it. I remember our conference, we were like 250 people in this conference in Hong Kong on NFTs. We were I think it was the whole world of NFTs was in that room, right? Which is how we met OpenSea and all those guys, because we were like commiserating around, oh, we should talk about NFTs. You believe in NFTs? Great, oh, wonderful. And we basically just, drank our own Kool-Aid, and that's how we survived. But the main thing around that was that actually NFTs, they store that culture. Culture today, if you think about it in the physical world, is also the biggest store of value, if you think of it this way, right? Money is fungible, but culture is not, because it's important to us. And so that's why it locks culture, it locks about value. So that's kind of why I think it's different, because people are now constructing these spaces. And really, most of the conversations I'm having today versus 4 years ago was, when do I buy? Whereas 4 years ago, it was mostly, how do I get out, right? And that's different. Yeah. So we don't know what the bottom is. It could still go down, of course, but people are just looking for the right entry point. The world has a lot of capital. It knows today that the metaverse and Web3 is important. That's changed from then and now.
Yep. I agree. I guess we're not. This isn't a very good debate. And you were talking earlier about sort of ecosystem investing, which is I think what you do. And,
Yes.
And how does Japan fit into that ecosystem? And what do you think? What's your plan in Japan?
Well, I mean, first of all, we're always fascinated with Japan. If you think about Japan, its most important treasure is really its culture, right? And you don't have to think of it as just the physical assets that you have. If you think about, what is the first entry point of, Asian or specifically Japanese culture in the world, it's often food, right? Everyone loves Japanese food around the world. So you have already entered the world of global culture that way. And it comes in other forms, whether it's manga or anime or all that kind of stuff, and media and so on. So you have a lot of culture that's also historic. And you can unlock that culture in Web3, because that's how you can truly value that. So I feel like Japan has an incredible opportunity to represent itself with Web3 culture. And I think one thing here, though, versus other countries is America, by its nature, is very decentralized. And that's why it can grow faster and easier. Whereas I think maybe, if I make an observation, Japan has always been very centralized. Its structures are through levels of authority. You do things based on a step approach, and because it's traditions. So traditions are good and bad. They keep society together, it's your culture. But the negative is that it holds you back as well, because there are things you can't really do that you shouldn't do, or you can't break this because it's not done this way, right? I see this, for instance, in Hong Kong as well, like with innovation. In Hong Kong, many children still live with their parents. It inhibits an innovative culture because you can't be rebellious, you can't be different, because you're at the end of the day at your dinner table with your parents, and your mom is like, so what do you do? Where do you work? Oh, I work in this company you don't know. I'm not sure, right? And you're judged by your culture, by your peers. So it's a pros and cons, but obviously, Japan has always demonstrated that they can come out with incredible innovation, and Web3, I think, is naturally made for you.
And I kind of put a hypothesis at the end of the Bored Ape thing that I talked about, where they went from content to actually building the metaverse, right? And that feels very entrepreneurial to me. And if you're talking about Japan having culture and similar sort of a risk-averse thing, I mean, can you imagine, what have you learned from the Bored Ape story that you would use as advice to culture and content people here? Because it's hard to become the Bored Apes, right? And somehow they pivoted from, or maybe they had the idea from the beginning from just sort of profile pics to
no, there was definitely
enterprise.
a pivot. It was definitely a pivot.
Yeah.
Sometimes when many of these profile picture businesses started at start, right, including Bored Apes, nobody really knew where it was going to go, right? Like brands today. I don't think that many of the brands that we see today that are really big started off with what they are today. When they became big, though, they realized they then had responsibility. And for the Bored Apes, it was a responsibility to bring more people into Web3, to bring more people into the metaverse, and to make it more inclusive. How do you make it more inclusive when to own a Bored Ape is 100,000 US or 200,000 US? That's really hard. And that's why the token was born. Because now I can be a member of this society by paying $10 or $20 and being more inclusive. That was a concept. And then creating adoption. So other games use it. You have Bored Apes restaurants. You have drinks, whiskey. We don't have a Bored Ape sake. I need to find someone in Japan who might want to do that. But anyway, right? That kind of stuff can evolve. So for Japan, I think you already have these societies that have culture in them, but you haven't found a way to distribute it because tokens, you're not using the token framework that's out there. And maybe one parallel I want to explain is that you don't have to be big in Web3. You don't have to have millions of customers. Web 2 gave us this illusion that to be successful online, you must have millions of users. But actually in Web 3, you can just have thousands of users and you would be a very sustainable business because the earnings are high enough. You don't have to be a VC business, right? It's like running a restaurant. With Web 2, we created mass commoditization where one stream is the same. My talk and your talk and everyone's talk is worth the same in Web 2. But in Web 3, we can now have differential value. Your NFT, my NFT, your NFT can have different value, right? Imagine if the world was based on Web 2. The restaurants were based on Web 2. We'll be all eating McDonald's, right? Because we go for the lowest common denominator. We can't have great restaurants as you have here, Michelin star experiences that only cater to maybe 100 customers. And that's good enough. And this is where I think Japan has this incredible power. You have these cultures where it's really meant for these small communities that will cherish your work. You don't need to go and build for something at scale, and we can make a sustainable business.
Cool. Thank you, Yat. And we'll be back at the end of the conference to do a wrap-up. Thank you very much.
Thank you.
ヤットさん、伊藤さん、ありがとうございました。
Thank you very much, Ito-san and Yap-san, for your presentation.